Tushar Bansal, Head Oil East of Suez at FGE, is now joining us from Singapore. Tushar, good to have you on the show today. So no agreement as expected, but we didn't really see any wild swings as well as far as the crude oil prices are concerned.
Well, the outcome was effectively known. It was not unexpected. If something would have come out, that would have been unexpected. Essentially, it means that the balancing process continues as per usual, and the higher demand continues to start balancing the market much faster, and we should see higher prices by the end of the year.
So, is the stage now set for the prices to probably go up to $60, $70 a barrel, because they're already hovering around $50 a barrel?
I wouldn't call 70 yet, but certainly they're looking to cross $60 before the end of the year. I have to say that in the very short term, in the next few months, there could be some softening from $50 as the Canadian, the fires in the Canadian oil sands, they abate, increased Libyan supplies come into the market. So we could see some softening from the 50 in the very short term, but going further ahead, 60 is very much in play, although I wouldn't call 70 yet.
Last time when we spoke, you were talking about $50 a barrel by the end of the year. Now you have increased it to $60 a barrel. What does it really mean as far as the production is concerned? 2 years in a row, we've seen prices remaining depressed. Many of the units worldwide had to be shut down. Do you think all that is going to kickstart as well now?
Well, demand has been coming in much stronger than what was previously expected around the world. India is a prime example, but demand has been strong contrary to the reports, even in China, in Korea, and in US, for example. So overall, the global oil demand growth has kicked up substantially from last time. And this is contributing to the higher expectations in prices. Now, last time when we spoke, I spoke about 50 to 55, and we are definitely expecting to cross it. Why it has crossed right now is because of the sudden shortage, or because of the reduction in supplies because of Canadian oil fires. But this is expected to abate in the short term, and that's why I expect a little bit of softening. But thereafter, definitely the market looks pretty strong. The demand is catching up, and there aren't enough supplies. So we are in for much higher prices going forward.
When you say a little bit of softening is something that you can expect in the near term, which would mean oil around $45 a barrel or even lower than that?
No, not much lower than that, because demand has picked up. Demand is pretty strong. So not much room to go much beyond that.
So in a way, we've already seen the bottom at around $27 a barrel in the month of February. And we are never going to revisit those, at least in the near term.
Let's not say never, but definitely it doesn't look, a repeat does not look on the cards anytime in the near future, definitely.
In terms of production, what do you expect now? Do you think that's going to suddenly increase? While on one hand, demand, some green shoots are visible in terms of demand improvement. What I really wanted to ask you was that there were many companies where the work was getting affected because of the depressed oil prices in the last 2 years. Do you think now with oil prices inching higher, the production there is going to start as well? Which are the key economies that you will be watching out for in that scenario?
Well, definitely at $60, a lot more producers can start or restart their production. I'm looking at shale predominantly, but what I am also monitoring on a day-to-day basis is Venezuela and countries such as Sudan. What goes on in those countries? How much Iranian production comes back? But the biggest wild card right now is undoubtedly Venezuela. And if something happens, if there is a social revolution, or if production is impacted because of lack of investment, then that is definitely a sign for further bullishness in the market in the short term.
You spoke about shale particularly. We are likely to see a new president in the US, very soon. How do you think the situation is going to change as far as the shale production is concerned with the new president, who would be coming in? What is the market? How is market really reading out that situation?
The new president or the old president, it doesn't really matter. The shale will continue as per economics. There are talks about reducing the methane output from some of the wells. All those processes take time. In the near term, no real impact because of the presidential elections. So things will continue. The impact will come because of economics. So if prices rise above 60s and they remain there for some time, then a lot more producers will look to restart a lot of their wells which have been mothballed.
Right. Also, the next OPEC meeting is going to take place on 30th of November, which is a little far away from where we are right now. In the meantime, what do you think, which country is going to be the key influencer ahead? Somebody from the OPEC part or somebody from the non-OPEC cartel, which is going to really dominate this entire oil sector going forward?
I would turn this around slightly. I would say, what are the risk factors in the next few months or 6 months going forward? I, on a daily basis, look out for Venezuela and Iraq. Those are the two biggest wildcards which are out there. And there are changes which can happen, unexpected changes, unexpected reduction in supply, which can happen from either of them in the next few months. And that would be a much stronger impact on the oil prices. Unfortunately, both of them are looking to potentially reduce output rather than increase. So any movement there means more bullish oil prices rather than a reduction.
Right, and you would believe when Saudi Arabia says that they will really not give any shock to the world by suddenly increasing their oil production in order to get more market share?
Yes, that is very much right and believable. Also because they only have about 2 million barrels a day of spare capacity. So now if they start increasing their production now by about 1 million, then the bullets which they have in their repertoire, they end up using them. And so they do not have any bullets left in future. So I don't believe that they are looking to increase their production substantially. They can, but they are not looking to do that, and I don't expect them to do that anytime in the near future. So Saudi should remain producing. The big thing which could happen is their exports could increase, however, and the reason being they are using more gas in their domestic power plants instead of crude oil in the summer. So that's the only change.
All right, Tushar. Thank you very much for joining us here on NDTV Profit. It's always a pleasure to have you on the show on the oil sector and what's really happening there globally.